The business of hydrocarbon exploration continues to gather momentum in many resource-rich basins across Africa as countries increasingly turn towards downstream development to maximize the benefits of their significant oil and gas resources. In West Africa, the region is witnessing a wave of new refinery projects in recent years aiming to increase domestic production capacity, reduce refined product imports, and strengthen socio-economic development towards energy independence. Hello, everyone, and welcome to this quick chat on Energy Frontiers. Joining me to discuss this new craze for refineries in West Africa is Simon Ferrieis, the editor for Sub-Saharan Africa at Petroleum Economist. Simon, thank you for joining us today.
Hi, Justina. Yeah, thank you very much for having me on today.
Now, let's begin with by exploring the key factors contributing to the recent surge in new refinery investment in West Africa.
Sure. Well, I mean, speaking specifically about the Dangote refinery in Nigeria and maybe Sentuo in Ghana, one of the major new factors now is, there's a growing availability of alternative, shall we say, sources of finances other than traditional Western lenders. So with the Nigerian mega refinery, the Dangote group was able to secure large funds from domestic Nigerian banks, as well as funds from international lenders such as, South Africa's Standard Bank and so on. So we're really seeing the emergence of a much more robust financial sector in Africa itself, and one which is willing to invest in these huge and I would say much needed infrastructure developments. And then, specifically with Sentuo, of course, it's a Chinese-led development. So, that's part of the much wider, I'm sure your viewers are aware, wave of Chinese investment in Africa. Mm-hmm. We're seeing willingness by Beijing to finance and build large-scale projects, even if it's done through private intermediaries. Mm-hmm. And it's resulting in a very significant change in Africa's investment landscape. Historically, I think as many of your viewers will be aware, Western lenders have tended to back international oil companies and upstream developments, prioritizing crude oil and gas exports away from Africa, rather than, say, refining projects and things of that matter, which I think would, confer additional benefits for local people. And in the last few years, we've also seen many Western lenders shy away from oil and gas investments, they're fearful of negative publicity related to environmental concerns. I think another key factor in this growing wave of refining projects is there's, to my sense, growing awareness in Africa. We're seeing this amongst both governments and non-governmental organizations. I'm thinking here the African Energy Chamber, the African Refiners and Distributors Association, and so on. The continent really needs exactly these kind of infrastructure projects in order to develop and industrialize. The old, some might say neo-colonial trade patterns where we have African nations exporting raw materials to the West and then importing more expensive processed goods and products such as gasoline. That has to be broken in order for African countries to improve their trade balances and spur economic growth. And, I think it's clear that downstream developments, refineries specifically, will be critical in order to help African countries retain more of their natural wealth and, utilize those funds for internal development.
Right. Now you've really touched on several factors there, but I wanted to ask, how does the race for more refineries in the region align with broader regional and global trends?
I think it fits with a global pattern. We've seen rapid growth in refining capacity and also a shift away from, historic centers of refining, specifically Europe and the USA in the last few years. We've seen huge refinery expansions, especially in China and in the Middle East. We're seeing Gulf nations as we're seeing in Africa, looking to move beyond just a reliance on exporting, crude and gas, and instead looking to move into production and sale of products, and related industries such as petrochemicals. Saudi Arabia, we've had the Jazan refinery come online. Kuwait, there's Al Zour, and so on. Mm-hmm. So there really is this global wave of downstream development. And, at least on part of this, we're also, related to this, we're also seeing, at least in Europe, we've got increasingly stringent environmental targets, carbon reduction targets, and that's reducing the global competitiveness of some of the European refineries. It's also discouraging long-term investment. The sort of long-term investment that would be required to maintain Europe's current refining capacity. So, yeah, we're seeing a global shift to newer players, should we say, in the global refining sector. But we're also seeing a large expansion overall.
Now, what are your views on increased competition for African crude oil to supply these refineries when they are fully on stream? For instance, Dangote just a few days ago said it was now open to pushing out gasoline. Now, what are your thoughts on that?
I guess in part you're talking about, we've seen the apparent difficulties Dangote's had in sourcing Nigerian crude, for their own facility. I believe Dangote Group went public recently talking about crude producers have not been offering to sell them barrels directly, but rather going through trading arms and other intermediaries, which means a corresponding markup, and additional price premiums. So I understand that currently there are talks underway between the various Nigerian regulators and oil companies to sort of overcome this bottleneck. Specifically with Dangote Refinery, another key factor, NNPCC was supposed to have, a 20% stake in the refinery. I believe they've actually currently hold about 7%. So we see, there's a reduction there in how many barrels the NNPC will provide to the refinery. And let's not forget, NNPC and many oil companies, they've tied their crude production to raising finance. So, a portion of their production, their barrels, already going to other destinations. They've already got contracts locked in. So those barrels aren't really available for new projects such as the Dangote Refinery. I think that really highlights, how important it will be for future refinery projects. And of course, there are many, in the planning at the moment, how important it will be for them to be set up in such a way that the supply contracts are really firmly in place to secure that crude, rather than perhaps just being sort of implicitly promised for those sort of projects.
Do you see potential disruption for existing petrol products refining trade relationships between Africa and its traditional partners, especially in Europe, where there is that much dependence?
Yeah, absolutely. I think we're going to see significant disruption between the existing and the historical trade between Europe and West Africa, especially now, as you mentioned, the Dangote Refinery is producing gasoline. European refiners, we're talking here about especially the cluster around Amsterdam, Rotterdam, Antwerp, that kind of region, could traditionally count on Africa, especially West Africa, as a key market for petroleum products. Competition from Dangote, Centuo, and so on, it will eat into that market share, especially as, Dangote ramps up and, there's plans to further expand Centuo. And West African refineries will have the benefit of being located in those local markets. If they're producing gasoline and other products, it will not require transport from Europe via tanker. And so it ought to have a competitive price advantage. It won't include freight costs. And I think the loss of those African markets, or at the very least, the reduction of the European refiners' share of those African markets, I think it will further contribute to the shuttering of European refining capacity, unless those refiners can find new markets, maybe Latin America. But again, global competition in refining is really intensifying. And a sort of related matter, we'll see a shift in the tanker market as well, the product tanker market, which, for decades, there's been, such regular and heavy traffic between Europe and West Africa, particularly for gasoline, but not exclusively gasoline. That's a whole other segment. Those tankers, those ship owners, those ship charterers, they'll have to find new trade routes as those West African refiners, really establish themselves in their regional markets.
Now, how would an increase in the number of refineries in the region contribute to the AFCD, that's the African Continental Free Trade Area? Now, I know you already mentioned a few factors around regional trade, but do you see this as a factor as well? Now, I wanted you to tie this as well to if this establishment of these refineries would impact fuel costs, exchange rates, and so on.
Okay, well, first on the free trade agreement, the presence of these African refineries ought to contribute in various ways. Not least it ought to increase the volume of goods. In this case, petroleum products that are produced within the free trade agreement zone. We could, for example, see products from Centurion in Ghana. Maybe they could be exported to neighboring countries, say Cote d'Ivoire, without tariffs, and that in turn ought to spur regional economic development. Boosting access to energy is such a key, such an important missing element in Africa's economic development. And also these regional energy exports, in theory, they won't have to go through as many intermediaries. They won't be as many. There won't be as much of a freight premium on prices and so on. And so hopefully these products, energy just in general, will be more affordable for these regional markets. Ideally that will bolster overall economic activity, which I think ought to sort of feed into, the free trade agreement zone. Though, as I understand it, there's still a sort of process of ratification and implementation with the free trade agreement. So I guess we'll have to see what the final deal sort of looks like. And of course, presence of more refining capacity in Africa will arguably help keep wealth within the continent and help improve the trade imbalances, which hamstring the development of so many African countries and their finances. With regard to fuel costs and exchange rates, again, that ought to be all part of it. One of the major goals of the Dangote refinery was to lower local fuel costs, right, and of course help Nigeria sort of break out this historical pattern of imports and subsidies, though I, of course, understand that the subsidies regime has already ended. But I would say in terms of the fuel costs, some of that will depend on something we've already talked about, which is going to be the ability of refiners to be able to secure crude oil supplies at competitive prices, again, with the minimum of intermediaries or additional freight costs and so on. Another factor we could talk about would be the efficiency of these refineries themselves. But with these new projects, you would expect them to be sophisticated, and have up-to-date technology. So hopefully their efficiency levels, or technical efficiency levels, will be good. Exchange rates, of course, again, anything that will help African nations retain more of their foreign currency, not spending it on importing products, will ought to bolster the strength of African countries and their internal economies at the same time.
Right. We're still yet to see that effect of the Dangote's new push on oil prices. Recently, in Nigeria, we've had fuel costs going off the roof, and it's been a crazy haze around prices as well. Now, I wanted to ask, in terms of sustainability. In terms of sustainability, are there any concerns around this in terms of the sustainability on the environment?
So if I could sort of break sustainability into a couple of different categories. Yes, any big infrastructure project, and a refinery, particularly one as big as Dangote, is going to have an environmental impact, right? But I think it's important to really emphasize that Africa's carbon footprint is such a small portion of the global footprint. Both now today and also historically. I do think it's a little unfair to sort of potentially hamstring the continent's development with these, by emphasizing too much the potential environmental impacts of building these projects, right? But I would say there's also an environmental impact of shipping crude from Africa, large different distances, then having it processed into gasoline and so on, and then shipping it back. That's inefficient. That has an environmental impact. Shipping is a significant source of greenhouse gases. The other issue is sustainability beyond, environmental issues. I would say is actually overcapacity, right? So as I mentioned, we've got these massive projects that have come online in the Middle East and China in particular. So there's going to be a lot of competition in the global refining market. So there is a potential sustainability issue of, are African refiners going to be able to compete on that global stage? Say if Chinese refiners are able to secure, significant market share in Africa, then that could pose a problem, say, for local refiners. And that's, a sustainability issue in terms of how well these projects will be able to operate.
And then we have a couple more coming up. Liberia, I heard Liberia is about to look into having a refinery. Senegal as well, looking at that. So, hopeful that there will be a balance somewhere. Now, what strategies can be implemented to improve the efficiency of existing refineries in the region? We already have all of those refineries there and no viability. There is nothing coming out of them. But how do you see it this time?
Yeah, well, that's the thing. I mean, when you look at a lot of the existing refineries, I'm thinking here of, some of the smaller refineries in Nigeria, some of which date back to the 60s and 70s and really haven't been in any kind of operational shape for a very long time. Sort of endless refurbishment projects on them without any sort of concrete results, I think it's fair to say. There's a lot of old refining capacity in Africa that is just not really very functional. Beyond Nigeria, I'm thinking also here of some of the South African refineries and so on. They're in bad shape. Both either not operating, bad finances in some of them. Again, a lot of these facilities would need significant investment, refurbishment, updating, that sort of thing in order to, be able to produce any significant amount of products. Some cases, the investment, the case for investing all that money might be a difficult one to make, especially as we've discussed, global competition is really, intensifying. So again, I'm not too optimistic about some of these shuttered old refineries. A lot of them are going to be sort of relatively out-to-date technology, if in best case scenario, right? They're not going to be very efficient and so on. They're going to be, they're going to have a high carbon footprint, greenhouse gas emissions, that sort of thing. But as we discussed earlier, there's this growing financial robustness within Africa, and also other potential sources of finances, right? So we could see African governments and developers tapping, African banks, maybe something like the African Development Bank, maybe Chinese lenders and Chinese companies might be interested in helping revive some of these refiners. But again, I think in some cases it might be sort of better to start from scratch, right, with a new new facility. And of course, as we've already touched upon, there's the potential issue of sourcing barrels to feed these refineries, right? So yeah, so overall, I'd sort of say I'm a lot more optimistic about the new refinery projects than sort of bringing some of these old developments back online.
And speaking of robustness, thank you so much, Simon, for that robust insight into the factors driving the surge in refinery construction across the West African region. Simon Ferrieis, editor for Sub-Saharan Africa at Petroleum Economist. And we thank you everyone for watching and see you next time.